Welcome back. Joining us for a look at the day's market moves is Antonio Senatore from Cartesian Capital. Antonio, thanks so much for joining us today. Now, markets hit a record high last week on positive US economic data as well as that AI boom. However, we are starting to see somewhat of a pullback today. Antonio, what's the reason behind this? And what we were seeing last week, was it just a short-term rally?
Yeah, so during today's session, as you mentioned earlier, the Nikkei surged past the 40,000 mark for the first time, a year-to-date increase of 20.5%, and that was propelled by robust corporate earnings, a yen depreciation, which benefited exporters, and more interest from foreign investors who are seeking alternatives to China's sluggish markets. In the US, the Nasdaq and S&P 500 both hit record new highs on Friday. That has pulled back. I think the markets are just waiting for the jobs data, as you mentioned earlier. And yes, it was fueled by a boom in chip making and AI stocks. And I think that should be supported. That boom should be supported by a cutting interest rate cycle that we are expecting this year, and the continuous earnings growth, especially in new technology, where something like AI, which is a new lever of growth, still has a lot of runway, in my opinion. There's still a lot of development that will happen in that space.
So now we are just waiting to see how that AI boom kind of plays out, because it has been boosting markets tremendously over the past few months. I just want us now to get into some company news. Earnings season is in full swing here at home, and a company that's been making gains, Antonio, in these tough times is Bidvest. I mean, we welcome growth at this time, but we do need to mention that that growth has somewhat slowed on the bottom line, with HEPS only up 5%. Just take us through your assessment of those numbers.
So Bidvest is up 7.9% today. So the market took the results quite well. It's a proxy for the South African economy, because Bidvest, they operate in all sorts of industries, and they put out a very cautious assessment of the market a few months ago, because they say economy is under stress. So they probably just wanted to prepare the market for that. And so the results that were released today seemed better than the market expected. HEPS up 5.3%, interim dividend up 6.9%. In itself, 5.3% earnings growth is not a big number, but it's better than expected. And I think it's commendable that they've been able to generate that growth in an economy which is expected to have grown less than 1% last year.
So now we had also out with results was RCL Foods. Those earnings, however, were overshadowed by its decision to spin off Rainbow Chicken and list on the JSE. What did you make of that move?
I think it was a good set of results. The chicken business, so it's quite a different business line to the rest of the food group, which does food manufacturing like peanut butter. So I think they're separating it so they can grow that business in its own right as a separate company. And the chicken business is also very cyclical and also subject to the competition of imports. So they probably just wanted to take the cyclicality out of their normal food manufacturing business.
I mean, we've been seeing what has been happening with Quantum Foods as well as Astral. So that business is a bit tricky at the moment. We also had Aspen, which seemed to have excited markets. That share price, I think, during the day was up 6%. It did close, however, just over 3.5% after it released its half-year numbers. Now, revenue was up, but HEPS were down. Are markets just excited about that outlook, especially as the group expects to record upbeat revenue and earnings moving ahead?
Yeah, that's exactly what it is. It's the outlook that's getting investors excited. So HEPS did fall 6%, but Aspen, they said that they're finalizing deals over the next year to utilize idle capacity in their loss-making factories. So it's all about loading the manufacturing plants, because when you get more volumes through, you get greater efficiencies and it becomes quite profitable. And they've been quite successful on winning contracts in their manufacturing plants for drugs, especially sterile drugs. So the market is finding optimism in them winning contracts to load their manufacturing plants, which they have all around the world, not just in South Africa. And these are world-class and very specialized plants. So they can take advantage of this boosting demand for obesity or weight loss products or drugs. And that gives them an edge. these specialized plants. So they're winning international contracts. It's putting them in a good position for future earnings growth.
Antonio, there's so much we can chat about, but there's so little time. Before I let you go, what is your stock pick? I know you chose one that released results as well today.
AVI, they released half-year results this morning. Headline earnings per share up by 17.4%, which is very strong. Revenue was up only 7.1%, so they became more efficient. They're a food manufacturer. They've got very strong brand names, Five Roses, Baker's Biscuits. And if interest rates do come down over the course of this year, we should see more discretionary spending from the consumer. And the same applies on the clothing side, where they've got Green Cross and Spitz, for example. And with lower interest rates, the clothing side, which is more upper end, should also do quite well. The only difficult part is I&J, which is a fishing business. They had poor catch rates, which were lower than expected. But the fishing business is very cyclical, and AVI could potentially look at selling I&J given the right price. So there is that cyclical component, but AVI is fairly defensive in the sense that they've got very strong brand names.
So AVI, one to look out for. Antonio, thanks so much for joining us today. That was Antonio Senatore from Cartesian Capital.